think you can hear me, right? Well, good morning. My pleasure, my privilege to moderate this panel about public equity in Africa. Here in beautiful and newly Mediterranean city of London, the weather is just terrific. It's like Casablanca, actually. Our distinguished panelists today are David Grayson. David is the co-founder and CEO of Auerbach Grayson, a global investment bank and stockbroker out in New York City. He has been in the securities business for over 35 years, and his firm does business in over 120 countries and counting. We have Erik Renander. Erik is an institutional portfolio manager at Emerging Markets Investor Management here in London. Erik manages portfolio invested in African public equities and also in fixed income, both in local and hard currency. And last, not least, Bendaoud Tali. Bendaoud is the head of strategy at the Casablanca Stock Exchange. He's among, one of his duties, actual duties, is to help setting up the derivatives market in Casablanca. He has worked several years in Europe, notably at Euronext Group and Réseau de Transport d'Électricité in France. So thank you so much. And let's start by this question. African public equity markets, does this actually has any sense? I mean, are we talking about one market? Are we talking about different markets? What's going on there? Maybe I'm going to start with David.
So, it's not the United States of Africa, but the panel title, I think, is Navigating Investments in Africa. And I was thinking about it and reminded of many years ago, I was sitting in a hotel restaurant in Harare, and I was alone, and there's a fellow sitting next to me, turned out to be a British Airways captain. British Airways used to fly into Harare. And I asked him what it was like to fly around Africa, and this was in the days before GPS. And he said it's a little bit like driving around New York City without traffic lights, because there's no central control system, and even today in parts of Africa there's not, whereas in most of the world there is. So navigating in Africa, I think the lesson is that you have to look at each specific country. In today's environment, things are difficult, though. You've got Egypt, which is, other than South Africa, probably the most liquid market with some of the best companies in Africa. Yet because of the dollar shortage, there's no money going in there. Kenya, same problem. Nigeria, same problem. And by virtue of the fact that you have all of these what were liquid markets are now illiquid, you've got a lot of political instability. You've got higher interest rates around the world. You have the Ukraine war. Now you have the Israeli war. A lot of clients have become very risk averse. So I think, long story short, when things are the darkest, that's probably the best time to be looking at these markets. But the answer is that you have to look at the pros and cons or the merits of each individual market. Even covering them, and we're a global investment bank and a broker, but if you look at the way the global banks cover companies globally, they cover them basically out of London, Hong Kong, and Singapore. But there's no one really giving pan-African coverage except us, but we have a network of brokers on the ground in each country in Africa with a capital market system. So The answer is you have to look at each country on its own merits, and then within each country you have to look at each company.
You've been, you are actually, you are on the ground, you are investing in those countries. What's your take on that?
I was thinking about your question. I was thinking more on the structural side of it, and I'll say my views for the investment outlook later, but just interestingly to foreign investors, there's a real split between South Africa and everything ex-South Africa, right? South Africa is very liquid, and in a lot of emerging market indices, a lot of foreign investors are quite familiar with it. But then there's a real break, everything X, and that's seen as a big jump into the Wild West, even though Morocco's not. But so that's a big. It's a very different allocation for investors. And like David said, there's been a lot of liquidity problems in that part in this space. And just over the last 10 years, if I haven't been investing in Africa, I mean, you asked, are these public markets worth it? And they have been evolving. There have been IPOs. And so it hasn't been explosive, but I see these capital markets developing. I see the number of listings growing very slowly. Egypt maybe a little faster. Nigeria started to develop out a OTC fixed income market. So it's interesting, but it is part of the economic development, and it is happening slowly. And but I just definitely think there's a place for it. Yeah. And you're from the exchange.
Yeah, I'm from the exchange, so my opinion wouldn't be that objective against yours, but I agree with David and with you, Eric. Africa is one continent, but very, very different capital markets intrinsically in terms of infrastructure, in terms of ecosystem players, and so on and so forth. So you need really to dig further in each country in order to get the best opportunities there. I might be not that aligned with you on liquidity. Liquidity is an issue for sure, but it's rather a consequence of a whole or a bunch of contingent causes than just surface problem. For instance, in Morocco, liquidity is not very good, but it's not an issue in the ecosystem. It's not an issue in the infrastructure, being it regulatory or technological one. The issue is only on the offer side. The demand side is there, and it is huge. And the demand is also coming from international investors. So each country has its own specificities, and I agree with you.
We'll get on that, and because there is a couple of things about liquidity. But if my numbers are right, there is 28 stock exchanges in Africa, which seems a lot. And we have seen ideas about building regional stock exchanges. One in, I think, in West Africa, and the other in Central Africa. Do you think that makes some sense to have those kind of regional stock exchange, and that might help actually investors not knowing that much those many countries go to Africa? What's your take on that, Bendaoud?
Well, you know me, Karim, and you have presented me like this. I'm coming from an integrated or from integrated markets, being it in the financial sphere with Euronext, which is, by the way, the genesis of Euronext back in 2000 was only 3 national stock exchanges: Brussels, Amsterdam, Paris. And now, if you look at Euronext, it's quite, it has in its DNA the backbone of the future EU Union of Capital Markets. So I'm coming from that framework. And even in the energy market, I worked with the Réseau Transport Électricité France in a project which is steered by the European Commission to create an integrated market of energy with cross-border intraday trading 24 hours, 7 a day. So I'm a strong believer of integration, actually. Now we can see all the hurdles and the challenges in the African world, and you refer to the West African Regional Exchange. I think it has a history of 10 or 15 years, but still it has the same problem as national stock exchanges, which is size. I think the market cap of the BRVM, Bourse Régionale des Valeurs Mobilières, is quite, it's roughly 12 to 15 billion US dollars. So you have an idea about the size. The other initiative is the central area of Africa. It is, well, it has more challenges than the West African side. There is also a global initiative steered by the African Development Bank and the African Securities Association, which is to link all the 28 or 29 capital markets in Africa that are represented in 38 countries out of 54. The project is launched since 2021. From the technical side, all is there. We are linking local brokerage with the sponsored link to local markets. Technology is there. The alignment in terms of post-trade is ongoing, but still there is a lot of challenges actually, because we need really to link strong capital markets, not only, and to put synergies together in order to cope with the usual problems, which are size, liquidity, capacity building, legal framework, and technology. So I am a believer of integration. We need to enhance things in terms of infrastructure and integration and harmonization. This is a very good, very good driver actually for African capital markets to thrive.
What about you, David? You made some good points. I don't think there are 28 exchanges in Africa.
I'm not sure about that.
Yeah, unless you may be counting some energy commodity exchanges. So there are really two questions. One is linking exchanges and the other is having regional exchanges. So the BVRM is a regional exchange. Mm-hmm. I think regional exchange makes great sense. It's 7 or 8 West African countries all sharing the same currency. But culturally, the reason it's not liquid is because there aren't enough companies listed. Mm-hmm. Number one. Number two, and this statement goes for the rest of Africa too, the government has to create incentives and has to understand the value of capital markets to encourage companies to list on these exchanges. Because by listing on the exchanges, the companies create more capital, enables them to grow, enables them to hire more people, employ more people, and helps dig a lot of these countries out of the terrible poverty that they have. The other problem, getting slightly off track, is that, again, cultural problem. A lot of the senior management of the companies, particularly in the BVRM, but other countries also, they're not incentivized to welcome investors. We send investors to West Africa. They show up and they confirm appointments an hour before. And why aren't they incentivized? Because they're not shareholders themselves. So if you're not going to make management shareholders in the company, they're not vested in the company's profitability and in being friendly to investors, both locally and foreign. And then you need mechanisms, I'm getting into the liquidity of it, you need mechanisms for bringing in local retail investors to add liquidity. The idea of linking stock exchanges never worked. Euronext, the backbone works, but at the end of the day, no one goes to a Portuguese broker to buy a French stock. No one goes to a French broker to buy a Belgian stock. So the stockbrokers are still there. They all thought when Euronext started, they'd all go out of business and they had to cover pan-Europe, but that just didn't happen. They recently started, after discussions for 10 or 15 years, an Andean stock exchange linking Chile, Peru, and Colombia. It doesn't work. It's the same thing. You're not giving access to a Chilean investor to invest in Colombia. Chilean investors primarily invest in Chile, and if they want to invest in Colombia, they're going to go to a Colombian stock exchange. And there are other examples like that around the world, but in the reality, none of them work. Regional exchanges work, providing it's a single regional exchange for the entire group of countries.
But maybe that's one thing to think about it, African stock exchange in the coming years.
Well, it'd be great for Morocco, which is in great companies that are slightly overvalued, but not a lot of liquidity. A lot of the management doesn't speak English, so it's harder to bring in foreign investors. Tunisia's tiny. Algeria is trying to get a stock exchange going. If you created a regional exchange among the three, it would really create something much bigger and better. But everyone, it's like a nationalized airline. Even though it's failing, everyone wants to hold on to it because it's a symbol of pride as opposed to building something better. But it all comes to building capital, in my opinion, creating capital.
Well,
I'm just going to add something to that.
Sure, Erik, please.
I think why Morocco stands out in this very tight liquidity environment is it's actually built up a domestic savings investment. So this is the problem with a lot of the other markets is there's very little domestic savings. So if foreign investors want out, there's just not many other investors locally, and Morocco has a very strong asset management business relative to the rest of Africa. And I think this is actually something that is going to come. It's very slow moving, right? But as incomes go up, you are going to start to see pension funds, local pension funds, building up these asset management businesses, and it will really start to help the exchanges, the flows, liquidity. But I mean, it is a longer term thing.
Yeah.
But I think that's why Morocco is kind of, and South Africa is the same way. Very big local asset management industry. So, they have their own local game too. So.
But there's another point with South Africa. I mean, before apartheid ended, and South Africa was one of the top 10 stock exchanges in the world. Now South Africa has some years ago made the pitch to become the stock exchange of Africa. But what they didn't realize is you still have to give all the local countries their own identity.
Of course.
So that's a separate problem. But.
Yeah. And there is also another problem with the African stock exchanges, which is also the shrinking size of those stock exchanges. I mean, if you look at South Africa, of course, it is the leader African stock exchange, but still, when you look at the metrics, a lot of delisting there, a lot of shrinking in terms of volume of IPOs and equity fundraising, so on and so forth. It's the same problem all over Africa, but yet coming to the idea of creating regional homogeneous capital markets in some areas, and afterwards, and this is the trend, this is the history that will go on, we can integrate forces in one single market.
I have to say there is an exchange that's trying to be the regional exchange of Africa, and that's the London Stock Exchange.
Yeah.
You're right.
Yeah, but the problem is for the majority, 98% of the African companies to list on the London Stock Exchange, while I agree it makes a lot of sense, unless you're doing a dual listing, you're taking liquidity out of the local stock exchange, and you have to subject these companies to a whole other set of rules. So I know companies that said, yes, I want to list in London, and then they start to go through the motion and they pull back because they don't want to deal with the bureaucracy. But it does make sense depending on the size of the company.
Exactly. We have in Morocco a dual listed company with Euronext Paris, which is the telco, and we have witnessed that, in contrast with the idea that liquidity will go to the biggest market, liquidity came back to Moroccan exchange. Why is that? Because of the size, because of the interest, because of a lot of things, and the equity story of the company. So you're right. It depends on each company and the infrastructure and a lot of things.
You guys touched on a very important point, which are IPOs. Do you think that privatization is something that has to be pushed? I mean, we have seen telcos owned by governments, many businesses that should be private, actually should be in the private hands. Do you think that we should push privatization to get those stock exchanges alive?
100%. 100%. So, as an example, when MTN got the mobile license to operate in Ghana, the government said, we're going to give you the license, but you've got to list on the local stock exchange within 5 years. And of course, management of MTN dragged their feet to doing it. Finally, in 5 years, they went ahead and did it because the management didn't want to be subject to public scrutiny. And why not? Because they're not shareholders themselves. But the other thing that the government mandated was, I think, 30% of the deal, I can't remember exactly, had to go to local retail investors. And the only way that the local retail investors could invest was through an app on their phone. But that adds liquidity overall to the exchange. So, yeah, it's.
I think that stock's the most highly traded on the market now. MTN Nigeria.
In a relatively.
Yeah.
No, Ghana, I'm talking.
Oh, you think about Ghana? Okay.
Yeah. Has anyone in the room from Ethiopia? Hey, gentlemen. So Ethiopia is going to be the best success story in Africa. It's a country with over 100 million people. Other than maybe North Korea, it's the largest country in the world without a stock exchange. And they're starting a stock exchange, and they've got a lot of state-owned companies that are, I think, going to be listed on the local exchange. So they'll create a lot of liquidity. If they listen to me, they'll list the companies in dollars, which will stop help stop the dollar shortage in Ethiopia, and create a very liquid exchange. But the governments need to understand that there's no better transparent, legitimate way of raising capital than through the capital market system, as opposed to the IMF or IFC sending dollars, half goes to the country and half goes into someone's Swiss bank account. My opinion.
We've talked a lot about liquidity problems. For me, there's two sides of this problem. Of course, there's the liquidity of the stock by itself, selling and buying of the stock, but there's also a big problem of dollar liquidity, of getting in and out, more getting out, actually, of those markets. Erik, what do you feel, what do you see with this environment of rising rates everywhere and, squeezing?
Say the real story?
Yes.
Oh. Okay. This title of this panel is the effective rising rates on the, and David will know all of this too. The unfortunate facts are, over time, the liquidity has gotten quite terrible in many of these African markets right now. There used to be a few countries that were problematic for getting money out of the public markets. I think right now we probably would struggle to get money out of Nigeria, Egypt, Zimbabwe, Ghana, Tanzania. I'm trying to think, most of them, except for Morocco and South Africa. So this tight liquidity, as it is right, it's at a very acute point right now. There's a lack of liquidity. There's high demand locally and from foreign investors trapped to get money out of Africa right now. And foreign investors seeing the one-way, seeing that they can't get out if they don't want to go in because they can't get out, right? So you have a very difficult situation right now. we're seeing like on trades, people really kind of almost saying, you know, stocks are down 70% and they're still willing to like, hey, can someone just make a price in something at very discounted levels? And it's kind of, they just want out if they can. And then they're going to have the problem after they get out of the stock, if they find liquidity in the shares, like can they get out of the actual currency? And you interestingly have this problem where sometimes people don't want to sell the shares because the currency is hyperinflating, and actually the shares are a better store of value than being in the cash. But they're trying to judge in their mind how long will it take for them to be in the queue and get out, and if it's under a few months, then they'll probably try it. But that's the positive maybe for this, right? This is kind of a dark situation. I think the positive is you have, and I hope this is the positive, is you have really, you know, people really kind of trying to get out, very pessimistic, sentiment is very negative, currencies are highly depressed, most of them have moved over 100% in the last 2 years, and you have stock prices that are down as well, so in dollar terms these companies are decimated, and for a foreign investor coming in, this could be a you know, if we get some kind of inflection point with the Federal Reserve, it could be a great time to come in. But yeah, it's liquidity is very difficult right now.
David, you share that?
Yeah, I mean, well, it's not an Africa problem, it's a global problem, liquidity. The volumes on stock exchanges are around the world. Vietnam is down 50%. The New York Stock Exchange is down 30%. The dollar problem is a bigger problem for the African countries, and I mean, the way I see it getting solved, partway, after the Arab Spring, the Cairo Stock Exchange had closed for 3 weeks, and people couldn't get their money out. Eventually, the government set up a fund where they guaranteed if you were a foreign investor, you get your money in, you get it out, no problem. I guess that fund went away, but in order to bring investors back in, you need, among other things, some sort of way of guaranteeing they can get their dollars out. And of course, hand in hand with that, in an ideal world would be privatizing companies and giving private companies an incentive to list on the local stock exchanges.
Bring more liquidity. Yeah. Okay. And let's talk a little bit about technology. Sure.
I mean, the terrible thing, it's like the stock exchanges, David. You said like everyone wants to have their little exchange, you know, from a terrible foreign investor standpoint, right? It's, you want to have your national exchange, and everyone wants to have their national currency as well. But from the global investor saying, you know, I don't want these little liquidity pools of Ghanaian cedis and Nairas and, you know, Egyptian, wouldn't it be great if it was just all dollarized, you know, and where you have this much bigger liquidity pool. So that's I think the fight that's going on with a lot of these smaller markets is globally investors are wanting liquidity, wanting dollarized things, wanting things on bigger exchanges like London, but then, you know, you just have these little liquidity pools that can become, you know, people are scared to go into them.
Well, an example of that, you know, we used to do huge amounts of business in Zimbabwe. And everyone's scared out of that. So Zimbabwe's answer to that was we're going to create a new stock exchange, the Vic Falls Stock Exchange, and everything's going to trade in dollars. But nothing trades, and who's going to go near it? Because it's connected with Zimbabwe. And they've got to solve the bigger problem in order to bring more investments.
Maybe the African continental free trade, which is ongoing under discussion, is going to be a good driver for economic linkage between countries, and maybe in a few years from now, unification of currency, which will give the background, solid background for more integration in terms of capital markets. That's good. It's going to be
that would be great. That would be a great idea. But look how long it took European Union to come together.
I see it. I know it.
One of the things you touched upon, and I think it's very important, maybe we can discuss this issue, is the local markets, the local investor. And I don't think that African capital markets, bonds or exchanges actually can be successful if there is no one investing from the ground. I mean, the people themselves. I think that we should probably, and Morocco is a good example of that, build the local investors, institutional, retail, and from there, open up to the foreign investors. I don't know what's your.
I totally agree with this. I think if I was Africa in a lot of these countries, I'd be like, screw these foreign investors. Let's do it ourselves. Let's build our savings up. Let's invest in ourselves. Let's build our own country up. And if they want to come in, fine. But they always come and go. We really need a stable base of our own savings. But you're building up a whole country of institutions and a lot of things behind that it's a very difficult thing to do, but I think it's essential. And I think the president of Rwanda was saying the same thing too, like we really got to invest in ourselves. And the most attractive thing is if we're investing in ourselves, like that is attractive to foreign investors.
He may have said that, but they have a nothing stock exchange.
Yeah.
I mean, I shouldn't say nothing. It's fledgling.
But maybe our Ethiopian friends are listening, and maybe
Yeah,
they're gonna
they're
start.
listening.
Since they are starting from scratch, maybe they can pick some ideas.
Well, they happen to have some great companies that they
Absolutely.
can list. So.
Absolutely,
Are we
absolutely.
gonna do a top picks round?
I was going to talk about technology and what's your take? How can technology help or not the stock exchanges and the liquidity? Do you think that technology can help us a little bit building better stock exchanges? Maybe Bendaoud, if you want to start.
Yeah, definitely, Karim, definitely. Technology is a key enabler to capital markets. And if you take the business model of stock exchanges, some of them have really come to the core, in which business we are. Some of them, they answered, we are in the technology business, not in the financing business, because there is no need to go into competition with the banks and all the other financing ecosystem. We are in the technology. We need to have the ecosystem plugged to our system. We need to give access to retail investors, to institutional investors, ease that access, broaden it, give the whole ecosystem and investor, the buy side, the information about the listed stocks, be it in the fundamental or the technical side, and also ease the all the back office work that all the custodians and brokers and so on and so forth are doing behind the scene, because this is gonna at the end lower the cost of transaction for each one. And this is really the most important benefit of technology, amongst, of course, a lot of things, which is linking different stock exchanges, securing the technology, putting there some algorithmic surveillance of markets in order to cope with frauds and market abuse and so on and so forth. So technology is key driver, and we need really to enhance the technological infrastructure in many African countries.
Do you think that those kind of investments have to go towards more retail or toward institutional investor?
Well, I think we need to use it in a broader way in order to address each segment. For instance, even on the fundraising side, we need to create platforms for SMEs to get to know and to get to know the capital market, the way they are functioning, and so on and so forth. We need to give access to retail investors via mobile trading applications, so on and so forth. And we also, with the institutional investors, we need to give them the best technology, the best access, because they are actually making the market by bringing liquidity there.
Few minutes left. I'm gonna ask you guys, ask you, David, starting with you. What's your best idea or investment theme? You talk about Ethiopia. Maybe besides Ethiopia, where do you see value?
Probably in Morocco at the moment, because it does have very low political risk and it has some very good companies. I'd like to say Rwanda also, although the stock exchange is fledgling. The largest bank, Bank of Kigali, or BK Group as they call it, was listed locally and it had no liquidity, so then they listed in Nairobi and it still has no liquidity, so the companies have to be careful where they list, but it's a terrific bank the whole Rwanda story is an incredible story. Ethiopia, which I spoke about, and Botswana has an interesting company called Letshego, and it's a tiny country with a stock exchange that functions, and unlike its neighbor South Africa, they have plenty of electricity which they export. So anyway, I think just my own feeling is when things start to look the worst is probably the time to start to invest. And right now things are looking pretty gloomy globally, particularly in emerging markets. The Israeli situation over the weekend is not going to help people look for more risk, but eventually that will turn around. So.
Erik?
I was thinking Safaricom is just an interesting antidote for people thinking about public markets. The stock, so it's the biggest phone company in Kenya. Really amazing about, they've changed the business. About 39% of revenues now are from mobile payments, right? And then another almost 20 from mobile data. It's really transformed from a voice company into this cool payments business and really leading the way on all these innovations along that line. That stock is down 70% from 45 shillings to 14 today, and I'll bet if you you could probably get it at 13, and there's sellers. So it's down 70%, and by the way, the currency's gone from 100 shillings to the dollar to 150, so in dollar terms it's even worse, right? But the interesting thing is, so Kenya is a market of I think 45 million people. Safaricom a few years ago got the license to be the first new telecom operator in Ethiopia, a country of over 100 million people. And they got a license to offer mobile payments. So these guys who innovated, pioneered mobile payments, are ahead of everybody else in Africa, are now going to go into a country 2.5 times their size, where their main competitor is the government phone company, which has been around forever. And the stock is 8.5 times just for the Kenyan business. The people are hammering it because also it's making a little bit of startup loss in Ethiopia. But wow, this thing's down 70%. They have the opportunity to go into a market 2.5 times their size and grow a payments business as well. Where could this company be in the next 3 years? And instead of Ethiopia being a negative to the company because it's losing a bit of money, they could be making more money in Ethiopia than they do in Kenya, which is what happened with MTN as well. Nigeria, people didn't think they should go into Nigeria. They make more money in Nigeria than they do in South Africa. So anyways, that's an idea.
Many opportunities. So yeah, thank you guys. Thank you so much. It was very interesting. Unfortunately, we don't have any time for questions, but you can ask questions after the panel. Thank you. Have a good day.